Well, the last couple of days in the market is looking like Christmas, and also is looking like Christmas circa 2008, because that's the last time we saw gas at these prices, $2 a gallon. Just for the holiday season alone, we're saving almost $2 billion. Some say we saved up to $500 billion. I think that number's high. Nevertheless, home sales up 4% last month. Consumer sentiment edging just a little bit, and there's so many signs that wages will finally start to creep higher. So is the economy on the cusp of a breakout? Joining me, David Dietze, Point View Wealth Management President and Chief Investment Strategist, and back with us as well as Peter Morici. David, I'll start with you. Does it feel like all the pieces are coming together?
Yeah, I certainly do, because, I mean, the fundamentals are getting stronger. We've got the good employment figures. We've got the low interest rates are going to continue. We've got the low gas prices. I think consumer sentiment is picking up as well. Autos, real estate, what's not to like?
Well, how come it hasn't kicked in to this point, I think people would ask?
Well, the knee-jerk economic reaction is, the low gas price is like a tax cut. And they say, where is that money going? And we're not seeing it in the traditional areas like apparels and TVs. Both our prices are down year over year because of deflationary force, because of the strong dollar. Where is it going? It's going into health care.
Yeah.
It's going into rent. It's going into our homes. Look at the sales at Home Depot. So I think there's a lot of non-traditional areas we're seeing that spending going.
There's no doubt about it. If people see these premium increases for next year on Obamacare, they'll blow your mind. But, Peter, are we something of a perfect storm? You've actually talked about this. You've been ahead of the curve. You sort of predicted this. Is this the moment you've been looking for?
Well, I think that we are at the cusp. Consumers have not been spending the money. All the things the other guest outlines are part of the consumer numbers that we have, and those spending numbers haven't broken out. But sooner or later, they'll start to spend the money. In the meantime, we continue to have retrenchment in the oil patch. Gas prices, oil prices have fallen much more than we thought they would, with their consequences. But I think come the spring, we'll be in good shape. Fourth quarter growth is not going to be very spectacular, and probably not first quarter growth, because winter being winter. But I think by spring and that this summer we'll be feeling a lot better about the economy than we are now. Now, is it back to the Reagan days? No.
Yeah.
We have Obama in the White House, and the prospect of Hillary Clinton becoming president is having a negative effect. We don't have a lot of small business formation, and the continuation of these anti-business policies is not helping.
Right, and there's no doubt in my mind, guys, that big businesses they're not going to put money at risk, and as long as President Obama is in office. Real quick, though, the market the last couple of days, David, looking intriguing to me, particularly these blue chip names. IBM's traded huge volume. Caterpillar, on light volume days, huge volume. Are we seeing a major rotation into these blue chip names, sort of a dog at a Dow thing starting early?
Well, it's too early to tell, but certainly large swaths of the market are down 20 to 30%. Your IBMs, your Caterpillars, American Express, and Walmart, they're offering good dividends. This may be the early signs of a rotation to some of those value names.
I got to tell you, 97% of the volume today on the New York Stock Exchange was positive. Folks, if you're looking for safety, some of those beaten down blue chip names might be the place to be. Peter, David, thanks a lot. Hey.